Good morning. How are you today? Nice meeting you. I'm very happy that we have the ability to discuss about markets today. I'm sorry I'm a little bit sick, so it would be great if you had any questions you have for me. You have them via chat, and I'm very happy to introduce you anything what I can about markets. Regarding myself, I've been 30 years in the markets, and I said that it's time to explore more of the topics and the insights. Well, if we go to we have two big main components in the markets. The one is that the stock market is influenced by two matters. The one is the inflation in the United States and in Europe. And the second thing is, of course, what creates the inflation, which comes out from the job market and the inflation expectations, which is out of the normal PPI report, producer price index, and the inflation by the consumer price index. We had on Friday the numbers. We had new jobs by 303,000, which was well above the expectations. The hourly earnings were at plus 4.1% year on year. Something that was hot was the monthly earnings, which was plus 0.35. So the Fed fund expectations, the expectations that the market is going to have an interest rate cut through the central bank, the Fed, went down from 64 to 57% for June. It's more likely that in June we're going to have an interest rate cut by Europe, because the European economy is struggling. And we had a lot of discussions last week from the central bankers. The United States has 12 central bankers. And the last one was from Minneapolis, Mr. Kaspari. He said that I'm expecting to have two cuts by the year end, by the Federal Reserve, or even none of them. So the market was a little bit disappointed, let's say. For the week, we had an increase in the Dow Jones in the American market. And finally, they went up to above 38,000, which was to close at 38,000, roughly 0.8%. While the Nasdaq went higher, 1.24%, and the S&P closed 1.1 at 5,204, while the Nasdaq Composite was at 16,248. Now, despite the bounce, all three indices had the worst performing week since the beginning of the year. Dow Jones was down 2.27%, the S&P declined 0.95%, while the Nasdaq 0.8%. Now, markets are understandably confused, but the underlying economic circumstances, which are the actual data which are released, like the jobs report, like other data, continue to affirm two things: strong employment growth, and the economy in the US is not anywhere near recession. So the predictions we had throughout the year that we're going to have a recession in the United States are not coming. I think that's pretty clear now for everyone. Now, regarding the unemployment rate, it went down from 3.9% to last month, from 3.8%. And the unemployment rate for Black Americans jumped to 6.4% from 5.6% in February. That's much higher than the overall employment. For the Hispanic Americans, it moved down from 5% to 4.5%. And from the ASEAN workers moved further down to 2.5%. Now, the small cap index, Russell 2000, was down 2.9%, which is also a significant drop for the week. Now, in terms of commodities, we have the oil price, which crossed the 50-year moving average, crossed the 200-year moving average. The 50-year moving average is 83.74, and the 200 moving average in the chart is 83.54. So we had a very interesting development there, which shows that global tensions play a role. Now, next week, we have the inflation numbers. And I think it's pretty important to see that the inflation has to be moving to the right direction, especially in the US. Otherwise, we will not see any actions by the Fed. That's according to my estimates. Now, any questions you might have? Well, I wish you then a great day. I will not move to any special recommendations because there are no questions and no participation currently. And we speak next week again. Take care and have a nice weekend.